Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 4th of October. Starting off with the FTSE 100, which is still making hard work of trying to get through that May resistance line there, 8360, right at the bottom of the range, or at least at the floor of that rising trend channel from this time last year, 8240. Don't want to see an end of the day close back below that, because that would risk either a move down towards 8165 or 8160, the September support intraday, and nightmare scenario of a move down to the floor of the channel and the 50-day moving average at 8020. But the longer this takes to resolve, obviously, the more we start to feel a little bit suspicious that this market is not heading higher, especially given the geopolitical situation. RSI at 47, so right on the support line there from the beginning of August. Don't want to see the RSI below 47 on an end-of-day close basis. Moving on to the DAX, which may give us more insight into what things are doing at the moment. Here we bounced off the floor of the 1 week old gap there around 18,900. Above that, looking for a retest of 19,500. If we do break down, then hoping that any breakdown here will be at least on the right side of 18,500 and the 50-day moving average. But wouldn't be a surprise if we headed back down and tested that line as we did at the beginning of September. The Dow is next, and here you can see that we've consolidated at the better levels. The recent support there, 41,700, and we're holding above that. At least while we are above that, looking for 43,000 at the top of the one-year trend channel. Worst case at the moment, probably 41,500, which was mid or early September support and the old summer resistance for this market. Bearish divergence there in the RSI window, so that means we are probably quite confident that 41,500 will appear, even if only briefly. Next up is Bitcoin, which has not covered itself in glory in the recent past, but at least has managed to find the 50-day line there on several occasions this week. That's at 60,200. That still means that we have the chance of being able to break the main March resistance line there, 67,800, sometime during this month. If we do break down the favored area, probably the upper 50,000, so 57,500, for instance, the last September swing low, or the worst case would be a move down to 51,500. And the floor of that falling trend channel from February. RSI on the wrong side of 50 at 48, so that means that we are struggling a bit at the moment, especially with that falling 200-day moving average. Next up is gold, and here the position is that we are holding well at the better levels. We've got this sharper rising trend channel, the red one there from the end of June, and that's running around 26.45. Above that, we're looking for a retest at the top of the old channel there, the one there from back in December, and that is heading for 2,700. Through 2,700, we could get a best case scenario target there, 2880 at the June resistance line projection by the end of next month. Not expecting much price action below 2620, the initial September resistance, even if that uptrend line fails from August. Moving on to the stocks, and starting off with the stock which I haven't covered quite some time, Ajax Resources. We had a recent RNS, so maybe something starting to go on there. We've got a broadening triangle base here, top of the triangle there around 4.5, so looking for that maybe by the end of the month, if this is the start of a move to the upside from a very oversold levels. Next up is Anglo Asian, and here we've been charting this quite happily in the recent past. The shares managed to hit the top of the rising red trend channel there at pound earlier this week, and that means that we're looking for the next level up, which is the upper parallel of that rising trend channel from the summer of 2023. We're looking at £1.25, hopefully over the course of October, while we remain above £1 and obviously 125, the 1 year or 2 year highs there for the shares. Moving on to Avacta, which had a bit of a rebound, a bit of a relief that we didn't have to, or didn't get stuck below or near the 40 pence level. The low there, 42, which was the late June support. We're back at resistance, the resistance coming from the old support that we had in the summer. So 52 pence, the magic number. We want to see an end of day close above that to get the shares having another test of the falling 50 and 200-day moving averages at 67 pence. But as you can see, over the recent past, that rather pesky 200-day moving average has been the block on progress, and you really want to see that and the 50-day line start to turn around relatively soon. On to Bezant, which has a rather complex chart, but at least you can see that the initial target area around 0.03 has been achieved, and while we're above that, looking for the upper parallel of the rising trend channel base that we've got there from the end of last year, perhaps up to as high as 0.45 rather, by the end of next month. But early days, and as you see from the chart, we've had plenty of spikes, false dawn spikes for the shares before. I think the best one would hope for would be that we can stay above the 50-day line at 0.026 for as long as possible, so that we can consolidate at the better levels. Corcel is next, and here the prospect of breaking a line of resistance there from back in June, and the 50-day line at 0.12 above that, obviously looking for 0.18 plus by the end of this month rather. But let's see if we can just close the week at or above that 50-day line and that June resistance line. Clearly you can see in the recent past, though, anytime we've had a 1 or 2 day rally, the shares have been sold into, so we want to get rid of the pesky seller there as well. Moving on to one of the stars of the week, or possibly the star of the week, which is EnergyPathways with its 5 million cash injection there, non-dilutive. Here we're at the top of the range, the old target there around 2.85 pence, an end of day or an end of week close above that, and we should be up to as high as 4.3 pence by the end of this month. Ideally, we stay now on the right side of that 200-day moving average at 2.4 pence, whatever happens. Uptrend line in the RSI window supporting the situation too, but what we don't want to see really is the shares fail again at this level for the 4th or 5th time. On to Emmerson, where you can almost smell the excitement in terms of what might emanate out of Morocco. We've had a good week obviously, but we've got the shares near the old April resistance around 2.6 pence. One that we'd like to see an end of day close above that, so that we can get up to the top of that triangle there, the broadening triangle there from the beginning of the year at 3.2 pence sometime later this month. All the while, we'd like to see the shares remain above the May resistance or post-May resistance at 2.1 pence, which hopefully they can do. On to global petroleum, which has been the gift that's kept on giving, possibly alongside mobile streams in the recent past. Here you can see we're just shy of that purple line there around 0.28. That was our sort of second or third target, so we're feeling quite pleased with that. Through 0.28, though, the next level up to 0.4 pence, maybe by the end of next month, while we remain above a previous target there of 0.21 pence. Onto a stock which looks as though it's really on the zeitgeist of events, rather awful events in the world on the geopolitical front. We've got a rising trend channel there on the Kromek daily chart from back in April. Top of the channel there at 11 pence, and looking for that perhaps as soon as the end of next month, given the way that we've got a rising 50 and 200-day moving average setup, and we've also gapped up today. That's the second gap higher in recent times, so a pretty strong looking situation. We expect an acceleration to the upside now, hopefully within a few days. Novacyt is next, and it gets the prize for having one of the more difficult charting setups, almost on a par with the Avacta. Here we got that resistance line, the red one there from August, the line there around 62 pence. We want to see the shares remain above that level and then at least head it back up towards the 80 pence level. We are helped by the way that the 50-day line is currently rising, and that should provide positive momentum. But what we don't want to see is the shares back below that 200-day line, 57 pence, anytime soon. On to the last two. The first one is Panthera, where we're hoping for the big move and the big result in terms of litigation, arbitration, etc. Here you can see that we've got a line of resistance there heading for 13 pence, which could be the target for the shares by the end of next month, if we can have some follow through on the latest move above a rising 50 and 200-day moving average. Obviously the big resistance there at 7.5 pence. So let's see if this is the time the shares can finally break through. Finishing off with the bears' favourite, Tern, and here it's the first sign that we're trying to consolidate above the top of that falling wedge there, around 1.3 pence. The more we can stay above that, the greater the chance of move to that red resistance line there, just below 2 pence, perhaps by the end of this month. That's it for me today. More updates over the weekend.